Hello and welcome to another episode of Fintech Focus TV with me, Toby Babb. Today we are catching up with old friends, Hirander Misra from GMEX. How are you?
Very well, Toby, and you look great. From the last time we spoke, I think you've been on the fitness drive, whereas we've all been putting on weight.
I had to do something after watching back that video. That's where it came from. So we were last. We were trying to work it out beforehand, weren't we? It's probably about 9-10 months ago that we had you on the show last, and right in the eye of the storm. It was another lockdown. We had kids back from schools at that sort of stage, and fast forward 9 months, not much change on that basis of being where we are, but lots of water under the bridge. Tell us how you guys have got on with that.
Yeah, no, that's right. Not much has changed. So Groundhog Day in many ways, but actually it's interesting because when we spoke back then, everyone was kind of taking a step back and looking at what they do. We spent that time looking at what we did on the marketing side, and we did a lot of thought leadership, and I saw that you did, and there were some great interviews there. And then come September, all of a sudden things got extremely busy. And now whether that was a function, I think it's a combination of people looking at projects that they put on hold and then realize that we're in this state for the foreseeable future, so we've got to do things, and some of those kicked off. And then also, especially on the digital asset side, folk looking at this area and looking at opportunities there and build out, and a lot of the opportunities that come with that. So from September till now, it's been crazy. We don't know where the time has gone actually. And much like some organizations in this space, in the fintech side, we're actually hiring. And we've expanded headcount rather than contracted it, really, which is good for you actually.
Yeah, absolutely. Well, it's not a unique theme as well, and I've one of the things that I've been saying all the way through is I've been tremendously proud to be associated with an industry that's been so robust through a period. Tremendously lucky as well to a greater extent, because I've got friends who are recruiting in retail and events and such like, and that's been a really difficult sort of play. But to see businesses and of all shapes and sizes continue to grow and to be positively aggressive in this sort of marketplace has been fantastic, and it's been wonderful to see what you guys have done. To hear that sort of positivity coming through from it. The theme and the constant theme all the way through Fintech Focus TV is to look at the positives from the negatives and seize opportunities from what we've been doing. And I've been very, very fortunate to be speaking to some amazing people over the last year, almost exclusively, who have grabbed the bull by the horns and been able to find really strong solutions to what's been a difficult economy market, but within it has come great opportunities. And I think interestingly, you guys have been in a space at GMEX where you've seen probably one of the most exciting times of the whole curve of digital assets, right? 2020 would seem to be a coming of age for it, and that's that's definitely rolled into 2021. But give us an overview of what you've seen in that space over the last year or so.
Yeah, it's interesting because we got into this space about 3.5 years ago, ahead of the market growth, because you've got to anticipate some of that, rather than build it and they will come, but see where the market's going. And we built out infrastructure front to back, trading, clearing, and settlement to support that. But then we also realized in that time that traditional asset classes are going to continue to exist. They're not going away anytime soon. Or if you're using blockchain, on the one hand, you still want to have swift connectivity and settle in the traditional sense and support traditional asset classes, and whether it's securities or derivatives. So what we did was we built a whole component-based platform that's both digital and traditional, so effectively hybrid. And that's held us in good stead, because that's certainly where we've seen the market go. But then more recently, I think we've been observing kind of that whole market sentiment, and we realized actually that there's actually more fragmentation now than there was before that digital assets uptake of blockchain, because you've got traditional infrastructure that evolved over decades, and whether we like it or not, or whether it's legacy or not as efficient, it's there. But now you've got multiple platforms and plays using different types of blockchains, or other forms of kind of digital centralized constructs. So the biggest challenge now is everything from exchange, trading, settlement, walled gardens, some of the large digital asset exchanges, to standalone plays that are kind of questioning how they plug into a broader ecosystem. So I think the next wave, very much, and we've just written a paper on this with industry thought leadership called Exchange 4.0 is going to be, well, how do we get that interconnection between traditional infrastructure, digital, but how do we get that two-way benefit with players across the ecosystem? You know, everyone from the exchanges and trading venues to the banks, the asset managers, the brokers, and everything on the post-trade side, from asset servicing to clearing to custody and settlement as well.
Yeah, that is a fascinating collision, isn't it? And yeah, it's got a sort of great story to it about the old and the new colliding, and we've spoken about this before. You know, last year, if you look at 2020, it was the age of digital transformation, wasn't it? It was accelerated like no time before, and we're seeing a whole load of theoreticals that have traditionally been looked at with the adoption of blockchain technology into capital markets suddenly come up and pose more questions than there probably still are answers. So I was saying to you about this beforehand, and I mentioned it on another show recently. You know, rewind 4 or 5 years, and we had a very strong debate around, you know, blockchain, which looked like the whole thing was moving at pace and was going to be very, very much mainstream. It was going to be the salvation of capital markets and efficient for everything and reducing cost, and all of a sudden everything's good. And then the brakes were pretty much pumped on it as people sort of found out a few more glitches and flaws in the plan. This to me sort of heralds a little bit of a new era, and I know they're separate in terms of, you know, crypto's ascent and how mainstream that's becoming and being backed now by banks and governments, et cetera, and separating it away from, you know, blockchain as a technology area and what it can do for other areas. Those sort of problems that have been created still need to be solved. What are you seeing in that sort of space, and what are the solutions for it, and why does it become exciting?
Yeah, no, it's an excellent question with some good observations, because in the early days, I mean, everyone was looking, if you go back 2-3 years, everyone was looking at blockchain for the sake of using blockchain. And said at the time, you really got to ask, you know, why do we need a blockchain here? What are we fundamentally doing that's different? And then, you know, you had over the last couple of years, lots of notions. Yeah, but you get, you know, 24/7 trading and real-time settlement. But then, you know, if you really know how markets work, actually real-time netting, great. And looking at, you know, position management, if you're trading across your own books and then, you know, across a range of venues, being able to manage those positions and have access to digital assets that might be in different custodians, and you want to put those up as collateral, as well as traditional forms of collateral, be it cash or bonds, is where the real challenge is, you know, to go from pre-funded positions to margin trading and real growth in this sector. So I think, you know, when people talk about, yes, real-time settlement, actually the market doesn't necessarily need real-time settlement, but it needs real-time position keeping and real-time netting, and then efficient settlement. And then, you know, a lot of the other challenges are, well, you know, this is interesting. A lot of companies talk about, you know, CSR budgets and you know, being carbon neutral or green and friendly. But then actually, if you're doing more and more on public chains, you know, or any form of chain, and there's a mining overhead and electricity, that isn't necessarily friendly as well. Equally, there's security concerns if you're moving assets. So actually, why can't you just, you know, be able to trade those assets where they're sat in one place, have a market position, and then settle them on or off chain on a net basis whenever you need to, periodically, whether that's, you know, at the end of the day or over the course of a period, you know, for different types of assets. And we're really going to now see the market evolve into that, because you know, more broadly at the moment, there's a constraint to trade, because you know, the way that these firms work, whether it's the prime brokers, whether it's the investment banks, the asset managers, they just don't go, okay, here's my digital asset silo, here's my cash silo, and here's my traditional bond silo. They want the ability to harness the benefits of all of those assets, whether they're borrowing and lending and pledging those assets, you know, putting them up for collateral to trade, whatever they're looking to do. And that's where we're going to see the next wave of growth here. And I think, you know, of course, you're going to have a multitude of exchanges and custodians and other services fight it out on either end of that. But those hub services in the middle of that construct that can offer a multitude, you know, some or all of those services are the ones that are really going to see traction. And also it allows you on one side to benefit from services on the other side, however that's done. And it creates that kind of bi-directional effect, you know, rather than just create single unicorns that, you know, just creating value for themselves, really.
I think that's been another theme of what I've been looking at over the course of 2020, which is that power of collaboration. And blockchain, by its very nature, is obviously a collaborative tool. But when we see how that sort of worked in real time, and how it created and numerous silos and issues around that as well, it sort of acted against itself, for want of a better expression, in terms of how that could happen. I'm seeing a sort of much greater appetite at the moment from institutions to move away from enterprise technology, and to bring in a number of different people who can collaborate to provide much better solutions tailored to that particular space, which I think is potentially the avenue that allows this to become a little bit more adopted, because it isn't just about saying, right, let's open the kimono to everyone. It's how can you utilize it with as you say, middle incumbents all the way through to allow that to happen. Tell me a little bit about your views there.
Yeah, it's an excellent observation. And actually, if you look at it, a cloud-based microservices kind of fabric architecture, makes sense in this space, because, people complain that, again, if there's more volume, don't the costs go up? But the costs are relative to that capacity and usage, right? So it scales nicely, and also it allows a much broader distribution and plugin. Because we're talking about a global asset class, and a lot of the issues here are, there's a lack of standards at the moment. Different jurisdictions are doing different things, but increasingly the ability to use smart contracts and affect cross-border swaps, whether it's atomic swaps and other forms of activity, become real opportunities here. And of course, there's no such thing as, as a global bank or a global exchange. It's the hard yards of getting licensing, and some of the stablecoin, high-profile stablecoin issuers, realize that, they announced, yes, we're going to have a global stablecoin, but actually the fact of the matter is that you've got to get regulated, and you've got to go through that. But you don't have time to be regulated everywhere. So it's about, okay, how do I collaboratively now link one node to another node and allow real business activity there, so that it's not just a piece of technology, we can really transact over it. And then the other thing is interchain interoperability. Yes, we've got more fragmentation now. Blockchains interconnecting is an atomic problem in its own right, but how do we find the means to do that? Because you're not just going to have these assets in parallel silos. They need to be able to coexist, interact, and interoperate as well. So interoperability is another theme that we're beginning to see now. And again, we saw this with Salesforce when it became successful. When it was a closed ecosystem, it was a fraction of the value. It became open API. Then all of a sudden, is the force that it is today. But with this now, you're talking about two-way APIs, because it's not just about APIs into a single entity in the middle. It's about the interconnect, so that everything can connect to everything else on a selective basis. Because of course, you should be able to pick and choose the services and the collaborations that you want.
Yeah, that interoperability has been another fascinating trend if you look at it, and the things that keep on coming back up. We did various debate shows last year with more and more companies who were talking about how they were able to operate together to reduce friction and provide greater opportunities for people to work with them, both on desktop and server side. And it's that sort of ability here to provide people with those win-win scenarios where it isn't just one winner in the whole process. It's a very interesting conversation I had recently was not just about, right, okay, this isn't about being the first or the fastest. It's about being just behind that first category to allow you to really avoid some of the mistakes and benefit from all the gains from it. You don't want to be last, you don't want to be first, and that's very different from maybe a decade ago when we first met, where everything was about the race to zero latency, right? And those wars that were going on in trading technology at that sort of stage. To me, it's been an age of people recognizing that the need for the industry to move further forward, potentially because of increased regulation, potentially because of increased cost and squeeze margins, et cetera, across everything. So those efficiency gains become all the more important, which isn't going to happen from one enterprise product, but is going to happen from people being able to bolt into that and help solve the real problems that are going to reduce cost, reduce friction, improve efficiencies, improve usability, etc., etc. And this is, to me, where it becomes very, very exciting about how blockchain technology, DLT, sort of comes across from being a crypto-based driver through to something that can add real value into a marketplace and change the game.
Yeah, you're absolutely right. And this is where, you know, when I talk about, you know, Exchange 4.0, it's not talking about, you know, trading venue or an exchange, you know, that's just one part of it, you know, given the other players we've just talked about. It's an exchange of products, services, and collaboration across the market, you know, which, you know, almost to me takes us back to the age-old days of bartering in many ways, but now, you know, with that network effect, because, you know, 1 + 1 really does then make 11, you know, if you have the right partnerships and collaborations, and that network, that two-way network effect, you know, ultimately helps create more growth overall, so the pie becomes bigger. So, you know, it's a form of broader exchange that's collaboration based, as you rightly said, you know, rather than saying, okay, you know, this is my walled garden, and you know, you can trade, clear, and settle here. And I think increasingly you could argue, yeah, you know, some of the larger players will continue down that model because, you know, they've got the flow, but increasingly a larger number of players by number have realized that they can only really survive and get traction and more opportunity if they do plug in those capabilities and services and have access to a broader customer base as well on the back of it. And certainly, you know, we're seeing that kind of resonate now across the market. On the flip side of it, you know, there's a lot of the large banks and brokers, players in this space. Many of them were kind of not that warm on crypto, but were working on security token offerings, and they thought that they'd have the infrastructure 2 years down the line to support that. Obviously, crypto skyrocketed. You know, we saw the price of Bitcoin now and how that's risen over the last months since December. And their clients, whether it's the asset managers now, and there's been a number of announcements since December of institutional holders, whether it's their retail clients, they're all asking for it on the execution side. And these players don't necessarily have the execution or the custody. So many of those are saying, okay, how do we get to plug into that more quickly now? Because, you know, by the time we get our own infrastructure, we'll have missed the opportunity. And you can only do that through collaboration and ease of access, really.
I saw a fascinating, this is a slight aside from this, so excuse me and humor me for a second, but I saw you know, just talking about the sort of crypto growth, I saw a stat yesterday, which was how Tesla has made more in their investment a month ago, profit wise, than they had in X amount of years. I can't remember how many years it was of producing cars, which is just an incredible statistic to throw out there, isn't it?
That's right. And he's got PayPal as well there, right? So, you know, again,
he's not done badly.
Prophecy, you know, with the marketing potential, you know, you put a buy recommendation on that, you know, then the masses follow, right? So it's interesting. But there will be that dialogue about the value as well, you know, because some people are debating that, you know, JP Morgan came out yesterday and talked about, you know, the value at $50,000 being unsustainable, right? And but many people were saying that at the $20,000 mark and the $30,000 mark. The fact of the matter is, who really knows, right?
Yeah, well, that's and it's been played out before with that as well, hasn't it? With everyone jumping on the last crypto hype circle, and that was there. This one feels, however, a little bit different to me. This feels a little bit more home to roost. It's a lot more institutionalized.
Yes.
It's a lot further back. It's a very different game that we're talking about. But anyway, I promise not to diversify too much onto that. I do want to diversify onto what you and the company have been doing, though. So we've heard a little bit about a fascinating space at the moment within there, and loads of opportunity. Tell me a little bit about how GMEX has fitted into that puzzle.
Yeah, so it's very interesting because, you know, we've used the pandemic to really look at the opportunity in this space and how we position it. So actually, we've seen increased demand from, you know, even traditional exchanges now that are saying, okay, how do we go into digital assets? And a lot of that is, you know, how do we bring in the knowledge? How do we bring in the technology? But where does that technology sit with the existing technology we already have, right? Because you know, we don't want to change the engine whilst the car's running on the highway at 70 miles an hour, right? We don't break the speed limit at 70 miles an hour. But
depends where you are.
Yeah, no, that's right. You know, Autobahn in Germany, then you're fine.
Yeah.
But you know, in that sense, you know, we're seeing those kind of more traditional exchanges, albeit slowly, wake up, and then newer players come into the market who need to be enabled as well. You know, and again, whether you deem that to be picks and shovels during the gold rush or not, you know, that may have been the case maybe a year or two ago, but now actually there's some really, really interesting business models, whether it's around alternative forms of structured digital asset products, you know, not necessarily just crypto, because you've got a multitude of crypto exchanges. Of course, security tokens in Western markets have been a little bit slower on the uptick because of regulation, but that regulation now is coming into force in a better sort of way, and there's more dialogue between regulators in different jurisdictions. So we certainly see the opportunity offshore and onshore. So, you know, that technological enablement for us, software as a service and software wise, has certainly been an opportunity. And there'll be some interesting announcements beyond which we've made over the next couple of months, because really the biggest shift has been unregulated to go to regulated. And a lot of our key expertise is the technology being adapted to the regulation, you know, whether we're running under CFTC in the US before, here in the UK and elsewhere. The other opportunity we've seen, we've recently over the last year got licenses in the Seychelles for exchanges that are hybrid and clearinghouse digital custody. And everyone kind of talks about why Africa. Well, you know, Western markets have got enough servicing with digital asset venues and custody, but we saw those markets as underserved. That's kind of been vindicated as well, because you know, the likes of Goldman have invested into Jumo, albeit a slightly different type of play. Bezos Ventures has invested into Chipper Cash on payments in Kenya, Jumo in South Africa, and we're seeing a lot of interest in Africa. But equally, there's no common currency, and cross-border movement and trade is inhibited. And of course, there are currency controls in certain jurisdictions. You know, Nigeria banned crypto just the other day. So some of those structural issues and solving those we see as an opportunity. I was speaking to one of the large banks today, and you know, you always wonder what their view would be of you looking at Africa and whether something you mad. You know, we've been involved in Africa for 5 years now in some way, shape, or form, and they actually support the opportunity, because a lot of the cloud providers and others are also looking at Africa, because young population, you know, how do they get the next wave of growth? And so we're going to see kind of B2B. You mentioned institutional and B2B, but you're also going to see the convergence of B2C and B2B. And we've seen that with you know, PayPal and the partnership with Paxos, you know, in the West, but you're seeing that play out more in Africa, because these guys just aren't serviced from a financial inclusion standpoint either. So we've been focused on that, and you know, we've been focused on how we develop hub models in the line that we've spoken about, you know, in a collaborative sense as well.
I've always admired what you've been doing in this, because it's always thinking sort of slightly outside the box, and this goes back to, you know, the sort of very origins of what you've been doing there. And I've been sort of peering over the fence and seeing these sort of forays into new markets and new opportunities, and you know, the more you dive into it, the more it's a fascinating way of looking at an issue. And I think it's something you guys have done tremendously well, looking at an issue and looking at alternative routes that can, you know, serve and think about it in a slightly bigger capacity. And it seems to be working pretty well for you. It's been a decent year, right?
Yeah, absolutely. You know, because you think in some ways, you know, when you look at unforeseen events, you know, you've seen this as well on your side, it almost gives you a chance to take a step back and you know, look at what you're doing already, and then look at where the opportunity is on the back of that kind of global crisis. So in that sense, you know, it creates a lot of opportunity, and you can either sit there and complain about what it does, you know, to some aspects of your business short term, or you can harness that opportunity. And it's less of a, you know, I had a call today where someone said, well, is that a pivot? No, actually, it's not a pivot, because it's actually using the core competence and expertise that you have, but just going after certain opportunities in a slightly different way. But it, you know, it still goes back to your bread and butter in terms of what you know, rather than kind of going off piste. So in a sense, you know, we've seen even more opportunity now over the last 12 months, and especially since September, than we've ever seen. You know, and you know, from that perspective, it bodes well. Equally, the other interesting thing is, you know, investors are coming into this space. I mean, we we keep getting kind of various approaches. You know, we've been independent to date, but there's a lack of bankable projects in this space, or bankable initiatives, and you know, that creates interesting opportunity, because the market's long on cash, and they're looking at those investment opportunities more broadly across the market as well. So I think it's going to be a really exciting time. You know, if we take a view of 12 months, you know, from here on in, and you know, can't wait to see how it plays out again. You know, when we have this conversation again.
No, absolutely. Well, it's going to be one I look forward to every single time. But I think there's a couple of things there that you've said that are really interesting. To me, particularly around, I've just seen some data that came through from is it Pitchbook, isn't it? When they look at things about how this is likely to be a record year for investment. And I think when you look at a lot of VC cash out there that's been sort of held back and reined back for a year or so, I think it's going to be a lot more difficult to push that money into, or to get access to that money. You're going to have the due diligence is going to have to be 10 times better. But there is a lot of appetite, isn't there, to invest into some of these marketplaces at the moment. And there's a lot I'm speaking to numerous companies who are at Series A, B sort of phase at the moment, who are right on the precipice of making fairly significant announcements of significant amounts of money, which has just been held back from the end of 2020 as things get sort of pushed back. And I love Andy Haldane, chief economist of the Bank of England, saying the other day the economy is like a coiled spring, because I think there is there's very much that sort of place in this. I think on one side, one part of what you were saying there, absolutely, I think it's going to be a very, very interesting year, and I think we're going to see some big success stories from companies that have been able to really think about where those opportunities are. The other thing you were talking there is the sort of dirty word of pivot, and it's a word that fascinates me, because it's seen as a negative in many ways, and people don't want to disassociate themselves with the word pivot, because they feel like it's an affront to their original strategy.
Yeah.
But I think it comes down to there's a difference between entrepreneurialism and pivoting. And being entrepreneurial is about reacting to opportunities that you see in the marketplace, and it's not about throwing your whole strategy out the window. It's how can you move this further forward and take advantage of opportunities that fit your current strategy and your current go-to-market. Unless, of course, you're in a situation where you're in a business that's been completely disrupted by what's been going on, of which there are plenty, and you need to keep the lights on. I think this is about being agile enough to see what's happening in the marketplace, to be able to react to that, and to be able to say, right, here is an opportunity for us to accelerate our position in the marketplace. And it seems every time I talk to you that has been something which you're ahead of the game on. So congratulations with that.
No, thank you. And it's interesting because we come back full circle. A year ago we were speaking about pivots, and then I had an investor call today, and the word pivot came up, and then a debate with our investor advisor that pivot, should it be used, shouldn't it be used? And ultimately it's in the manner that you've described, right? It's looking at the opportunity, and it can be by no means bad, as long as it translates into results ultimately. Being an entrepreneur, as you have for many years, you live and die by your own results, right? Ultimately you've got to put runs on the board, which England didn't do in the last test, but we'll see that play out this time around.
The first one was all right. Listen, Hirander, it is wonderful speaking to you. Thanks so much for sharing it. Every time is a pleasure, and I look forward to catching up again when we see the next phase of it. I love the symmetry of seeing how this whole thing plays out, and it's great to be able to to catch up with you again and see the continued success story that is the GMEX movement. So people watching it want to find out a little bit more, who've been enchanted by the conversation you've had so far. What's the best way of them doing that?
It's great. I mean, we've got a new report out, GMEX-group.com on our website, and that talks about a lot of these concepts. And there's good contributions from Amazon AWS, Fidelity, Zodia, which Standard Chartered have put together as well, with Northern Trust, and a number of others. So including TPI Cap. So again, that report, and we've got a webinar coming up on the 11th of March at 4 p.m. UK time. That's free to register as well, where some of those players are speaking about the industry, which should be quite exciting.
Fantastic. Well, let's put links to both of those when we put this out, and make sure we spread the word far and wide. It is an absolute pleasure as always. Hirander, thanks for joining us on Fintech Focus TV.
Likewise. Thanks, Toby. Pleasure.
And thanks for you all for watching. We'll see you soon on another episode. Thanks a lot.